CARES, and PPP for you. This is the third video in the series. This covers employee retention credit that is available for all businesses, big and small. Let us focus on this. Employee retention credit is available for all wages paid between the 12th of March and the 31st of December, 2020. The business gets a 50% tax credit on the wages paid. What all is included in wages? Payroll, plus health insurance costs. Is there a per employee limit on wages? Yes. It is $10,000 per month per employee. Is there any limit to the total dollar value? No, there is no limit. If the credit exceeds the withholding tax, you will get an immediate refund. We will later look at an example of how this works. Tax credit works based on how many employees you have. If the business had less than 100 employees, on average, in 2019, tax credit is available for all employees paid by you during the covered period in 2020, whether they actually worked or not. If the business had more than 100 employees, on average, in 2019, tax credit is available only for those employees paid by you during the covered period in 2020 and who did not work. Which businesses are eligible for employee retention credit? All businesses, regardless of size, are eligible for employee retention credit. Employee retention credit is available if during the first quarter of 2020, the business was suspended by government order. If business was down by 50% or more during the quarter compared to the same quarter in 2019, the measure for business levels is gross receipts. The employee retention credit is no longer available after the government order is withdrawn. The employee retention credit is no longer available after the business recovers to 80% of old levels. See later. When does the employee retention credit end? The quarter in which the business exceeds 80% of the past level is the recovery quarter. The employer tax credit eligibility ceases in the next quarter. Employee retention credit ends when Paycheck Protection Program begins. The credit is not available if you take a Paycheck Protection Program loan. Consider the date of Paycheck Protection Program loan approval. Employee retention credit is available till that date. Employee retention credit is not available. How it works. Social Security and federal withholding tax are deducted from payroll. These amounts are to be deposited with the federal bank account. The Social Security component is eligible for the payroll tax deferral. 50% of the wage paid in the quarter is eligible for employee retention credit. Not more than $10,000 per employee qualifies for the full period. Therefore, in a full year, not more than $5,000 per employee may be deducted. The balance is to be deposited with IRS. It could be that a refund is due from IRS. This is available immediately by filing a Form 7200 to put some assumed numbers. If the taxes to be deposited are $10,000 and $2,000 is the payroll deferral tax, A further employee retention credit of $5,000 is available. The balance to be deposited is $3,000. If the employee retention credit was higher at $10,000, then a refund of $2,000 would result. How the wage cap works. The first table relates to the current quarter. John has a salary of $15,000. Only $10,000 qualifies for employee retention credit. Jane and Joe have salaries within the $10,000. All of it qualifies for employee retention credit. Of the total of $26,000 wages paid, $21,000 are qualifying wages. 50% of that is the employee retention credit, which is $10,500. For the next quarter, John's wages do not qualify any further because the $10,000 cap for the period has been hit. Jane's wages in the next quarter will still qualify, but then the cap will have been reached. Joe's wages qualify for employee retention credit, but only for another $4,000, as $6,000 was considered previously, bringing up the cap of $10,000. In the next quarter, Jane's wages will be eligible. Joe's wages will qualify to the extent of another $4,000. The total qualifying wages for the next quarter are $9,000. The employee retention credit is 50% of this, and that is $4,500. The decrease in employee retention credit for the next quarter is the impact of the wage caps kicking in. Other nuances on eligibility. Here are the instances where employee retention credit is available. If a tribe or tribal entity operates a trade or business, tax-exempt employers can take employee retention credit. Self-employed with employees can claim for employees. Organizations with multiple locations, and if some are ordered closed. Organizations with different groups or divisions, and some are ordered closed. If the government order reduces hours of work, partial closure. If your suppliers were closed on government orders. Here are the instances where employee retention credit is not available. Self-employed with no employees. Self-employed with no employees. If there is a government order ordering shutdown, but teleworking was possible and done. State or local government entities. There are sure to be other, finer points to consider, specific to your business. You will need professional advice. We just wanted to give you a quick and easy start on understanding employee retention credit.